am now going to review all of the trade ideas that were published leading up until the end of April. So we start here with those that are under the heartbeat sheet. And the first one on the list is South Korea. So this was published on the 9th of April of 2022. So let's find here the 9th of April. So here is South Korea. So yeah, 200 weekly moving average support was like the key signal. So yeah, let's look at what happened. So let's find here the 9th of April. It is, so this is the following week. So let me just draw it in like that, and we got the handy drawing tool. So the thing is that the red 200 week moving average, it was a big deal then, and it has been a big deal later on as well. So long after the video, that moving average keeps playing, but the problem is that the bulls were not able to turn it into a support level. You can see here that the week after I published the video here, we did actually go down here to take a bit of a sleep. So the bulls had an opportunity, that final opportunity, but the big problem is the following week, the 18th of April week, where you see that, if we zoom in a bit, you see that the bulls, they did go all the way up there, but this is almost surgical resistance at the 200 week moving average. And that was a bad thing. That was really not good. Let's just measure here on the daily data points. So let's find here the 9th of April. So here's the 5th, 6th, 7th, 8th. So the first trading day after publication, we did see a bit of a rally, approaching 3% rally, which reflected, the attempt on the weeklies to form a low, but obviously the bears came back with a vengeance. So was this trade idea here a winner or a loser? When it comes to the 200 weekly moving average being very tradable for the EWA, the South Korea ETF, it definitively is the case. The interactions between price and this moving average was surgical. We did get a rally after I published the video, so this one is messy. So it's sort of like in a win in a sense that we did have a rally very short term, but obviously the bears, they managed to smash that support level. Now it is very clear resistance. But yeah, I think that definitively the 200 VMA continue to be a big deal for South Korea. So notwithstanding technicals, you had seasonality, fundamentals, and relative performance supporting a bullish lean. If you do not get enough bulls, then the support will fail. And obviously, we have seen other sell-offs in the market. So it's, South Korea, there's nothing specific about South Korea that would protect it from a global bearish sentiment. So let me just go here to this one and color this one in as reviewed. Okay, so next on the list is South Africa. This was on the 30th of April. Okay, so let's find the 30th of April. Here is South Africa. So 200 daily moving average resistance, so weak technicals, very bad seasonality. Fundamentals were good, but relative performance was not that good. We did, however, have an inverse head and shoulders on the weeklies. So here's EZA, South Africa. Let's find the 30th of April. So where is it? 30th. Yeah, so this here is the following week. In regards to the inverse head and shoulders pattern, it sort of is still here, but the latest pullback has threatened it substantially. But let's here go to the daily data points and do some measurements. So let's find the 30th of April, like this. Okay. So this is what I saw when I did the analysis, resistance. And you see that initially we got a pullback, then the bulls go up here and that they test, that moving average again, but it is another time resistance, and then we do get a approaching minus 12% pullback on South Africa. But it gets worse, it goes to show you. So 1 and 2 and 3, 4, at least 4 times, could even count 5 if you want. 5 times that the 200 daily moving average in red was a clear resistance level. So the bears, they just built their positions similar to how bulls, they build their positions on support. So this was, overall a bearish thesis. Was it a winner or a loser? Yes, it was. It was a winner. Certainly was. So let me just draw this one in as well. So I think the lesson going forward here is that, the moving average highlighted in that video, it definitively is a big deal for South Africa. The key thing about technical analysis when you find indicators that are highly interactive with price, very often it is specifically for a given security. That is one of the reasons why if you do like a big data analysis of 200 daily moving average, then you will find that it's not that predictive. But that is because certain securities develop relationships to certain specific indicators. Okay, next on the list here is this on the 30th of April, and the TIPS ETF. So let's go here to the laboratory and look at my notes. So 200 weekly moving average support, high score, bullish 4.3. 4 on the technicals, 6 bulls on seasonality, 5 on the fundamentals, and 2 on relative performance. Here is the TIP ETF. Let's find the 30th of April. It is, so this is the following week here. We go down, then we go up. So let's measure here with the dailies. Let's get the weeklies. 13th of April. No, it is here. Okay, of course, this is May. So when I made the video, then I saw this interaction. So we were above the 200 weekly moving average, but you can see that the following week we just, in a very nasty way, just lost it completely. So let's just measure here on the daily data points as well, like that. And let's get, that tool. Let's find here the 30th of April. This is the 29th. Yeah, so if we measure here from this, yeah, it just went down. Then we did get the bounce, but yeah. So did the 200 weekly moving average offer support? No, literally like the day after I published the video, that support was lost very clearly. So yes, so this one was, a loser in that sense. But I think the 200 weekly moving average, it's still very much a big deal. So highly tradable here for the TIPS ETF. So let's do it like this. And it is quite convenient that that the TIPS lost the moving average, like literally like on the first day. So it's very beneficial to really get out signal quickly instead of being like dying by 1,000 cuts. Okay, so let's go further down. What is the next one on the list? Yeah, it's this one, corn. This was on the 9th of April. Let's go to the laboratory. 9th of April. So here, yeah. Okay, so here we have horizontal breakout is like the signal. 0.5 here in favor of the bulls. But only 1 bull on the technicals, 3 bears on seasonality, 2 bulls on fundamentals, and 2 bulls here on relative performance. Yeah, so let's find here the 9th of April. It is, so here's the 4th, here's the 11th, so, yeah, so we did sort of get something, a great breakout-ish. Let's go here to the daily data points, like that. And do some measurements. So let's find here the 9th of April. Here's the 8th. The following day, the first trading day is the 11th. So if we measure here from the close, We did get a max potential gain here of 0.6%, but then it was given back not that much later. But there certainly was. I mean, the breakout was sort of like what the concern was that which ended up with like a 1 here on the technicals. So yes, we got that breakout, but because maybe of the bearish seasonality and the lukewarm fundamentals and relative performance, the breakout was given back. So now the corn futures are just in a mess because we have a very clear ceiling, and failed breakouts, they are very demoralizing because the thing about a breakout is that in order to pull it off, so the higher any kind of security goes, the more money is needed for it to go higher. That is just how the price works. That is why it is so important when you have a breakout, to have a massive inflow of new money. But that also is why it is so difficult to pull off breakouts. It's way easier for any security to rally off a low level because far less money is needed to make it move. Yeah. So let's just color this one in. So I will call this one a winner, but I certainly didn't have any like high conviction score here. Like that. Okay, so let's continue. No, that was there. Must have the right color. Yeah, I think those were all under the natural resources. Here is the next item, and this is the moderate allocation ETF. This was on the 23rd of April. So let's find the 23rd. Yeah, moderate allocation ETF. So we do have a 200 weekly moving average support, 3 bulls on technicals, 5 bulls on seasonality, 2 bears on fundamentals, and 2 bulls on relative performance. So let's here find the 23rd here of April. So this is the week right here when I sort of like when I published the video. Here is the following week. You see that we did lose here the 200-week moving average. So you have the loss here. In this week after that again, you do see that the bulls try to get up there. But this is where it really becomes like a surgical resistance level. So it goes to show you what was once a support can definitively become a resistance. So let's go here and measure on the daily data points. So here is the 20th, here's the 23rd. So the following day, so here's the 22nd, the last trading day. So the following day, we got a 0.40-ish% rally, but then it is given back. We basically just go lower. So yeah, so did this support hold? Obviously, it did not. But given that the 200 weekly moving average became such surgical resistance later on, it goes to show you that this moving average is a very big deal for the moderate allocation ETF. So let's just color this one in as well, because now it is reviewed. So those were all under the heartbeat, and next we will go to those under money. So the first item on the list is US dollar / the Japanese yen on the 9th of April. So let's go here to the laboratory. Yeah, US dollar, Japanese yen, horizontal breakout or overbought, question mark. 0.5 score here, so it leans a bit bullish, but very undecided. So 3 bulls on the technicals, 2 bulls on seasonality, 4 bears here on fundamentals, and 1 bull on relative performance. And we did have an inverse head and shoulders on the weeklies. So let's find here the 9th of April. So it is, so here is the 4th, 11th. Yeah, so here's the week following. So we did certainly go up. So let's go to the daily data points here to measure like that. Then we find the day after I published the video. Here's the 8th of April. Here's the 11th. So if we measure here from the close of the preceding, well, the close. Yeah, so from that point to here, this was 3.8%, a bit of a give back, max 5.52, major give back, and then all the way up here you would have, approaching 10%. That's very substantial in the Forex market. So one of the things I highlighted in that video was definitely the overbought levels as well, and we definitely have really extreme levels here on the RSI and the PPO. Really extreme, for sure. So given that there was a slight bullish lean here, I think this was a winner. It just was. Having said that, going bullish on any kind of security that is highly overbought, it usually doesn't work out. It's a high risk trade, and it simply is a question of probabilities. Because if you compare it to anything else, like if I say to you that I walk an average of 20,000 steps per day, and then you hear that I have walked 50,000 steps. If you were to guess how many steps I will walk per day on average 1 month into the future, you would most likely guess around 20,000 instead of guessing 50,000 or something like that. And that's just a question of looking at broader set of data, more data points, and then sort of looking at, okay, what is the average? So any kind of anomaly in the market, they are tradable, but they also are high risk because you are entering into uncharted territory. Okay, so if you look here at the next one, this is Canadian dollar / the Japanese yen on the 23rd of April. So let's find the 23rd of April. Here it is. So overbought RSI and PPO, and we also had horizontal resistance. So the bears got a 1 here on average. 5 bears on technicals, 2 bears on seasonality, 1 bull on fundamentals, and 2 bulls on relative performance. And we also had bearish time cycles. So let's find here the 23rd of April. So yeah, so this is the 18th, and here is the... yeah, it looks interesting as far as the thesis went. So let's measure here on the daily data points. So here's the 19th, here's the 20th of April, 21st, 22nd. Here, and here is the beginning of the next week. So if we measure here from the close before the weekend, and then we did go down 2%, then we rally a max 1.31. Then we got, a minus 3%, minus 3.30-ish% pullback. So in terms of, the RSI, horizontal resistance, all of those bearish indicators playing themselves out, they sort of did, but a bit more temporarily, because we did see here, from late May leading up until early June, we saw a very ferocious rally here in the Canadian dollar. But that is very likely a result of, the massive issues we have in, the natural resources market, due to especially energy when it comes to, that war in Ukraine. So I will call this one a winner because it moved in the expected direction rather quickly afterwards. But we have seen much higher prices, and we know why. The war is developing very differently from what people expected. So yeah, but at least we have an explanation, and it goes to show you that while looking at technicals, fundamentals, and all of those other indicators is valuable, what is the ultimate mover of the market is, the news, what happens, on the ground. And that happens before it is reflected in all kinds of indicators. So what is the next item on the list? I do think it might be something crypto. Yes. That will be Bitcoin / the US dollar on the 17th of April. So when we go to the laboratory, 17th of April, here. Okay, 100 daily moving average resistance. 2 bears on the technicals, 1 measly bull on the seasonality. and 1 bull on relative performance. We did have an average score of 0. I don't like the 0 score. I like to sort of force myself to push a certain direction, but I am able to do that sort of through the signal part here. Let's find the 17th of April. So it is this week, and we go down, 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 down. Daily data points like that, and we'll find the 17th of April. So it is. So let's get the measuring tool like that. So here's the blue 100-day moving average, and here it is, the 18th of April. So let's find here. So here is the 17th of April. So we go up here to test, but we are not able to really get above it. And then, you go down a massive, wow, minus 66%. So let me just draw in the moving average, resistance. This also resistance. And so the thing is that we did have a couple of days, like 1 and 2, where the bulls, they were above the 100 daily moving average, but they were not above it in a sense that would make the bears close out, a bunch of their short positions. Because that's the key thing when you reclaim a moving average. Like, if you look at this rally over here, like this rally, this will make bears close out various positions. So this is a power move. This is a very good move from the bulls. But the only day which I could see the bears maybe get a bit spooked is this day right here. And in all likelihood, part of this move was bears closing out some of their shorts. But, when the bears saw that there was no commitment from the bulls, that's when, the bears came back with a vengeance. And yeah. So was this a winner or a loser? So I did have that 0 score here, so basically very undecided. But the key indicator was 100 daily moving average resistance, and we did see that it definitively played out in a massive way, especially when the bears could clearly tell that even though the bulls pushed above it and closed above it, the bulls, they didn't have any buddies that came to their side and rallied higher. And that is when the bears went absolutely ballistic. And we have certainly seen a major breakdown here in Bitcoin. So yeah, I think I will call this winner-ish. Trade idea. Next on the list, also April, because the focus here is on April. So the reason why I review trade ideas that were published leading up until the end of April, that is because I do want around 2 months to pass after I publish a video. Because then the market will have enough time to sort of react. Okay, so here is, let's go to the laboratory, the 30th of April. In my notes, I wrote horizontal support. 3 bulls on technicals, 5 bears on seasonality, 3 bulls on relative performance. Cliffhanger moment for bulls. Yeah, so where is the 30th of April? So here is that following week, and we go down, down, down. So did horizontal support hold? No, did not hold. So let's measure here on the dailies as well. Let's find that 30th of April. So the interesting thing about, cryptocurrencies is that they trade every single day. So you get way more data than anything else. So here is when I published the video, the 30th of April. I mean, we did get a 9-ish% rally, 8-ish% rally. That is so. The thing is that in all likelihood, that rally came about because other people also thought that, we have the opportunity here to form horizontal support. But obviously, it didn't work out, and I think that the key event here, let me draw it in, it's this candlestick right here. This was a very big deal, because you can see that when you compare it to the one beside it, you see that it is it engulfs that entire bullish candlestick, and that is just it's not a bullish signal, to say the least. It shows you that there were no more bulls up there, and there were a bunch of bears willing to sell, and that will make the bears go very aggressive, but also it will make the bulls panic. So very short term, we did see that horizontal support played itself out, and a decent gain happened. So I would say that it sort of worked right after the video, but it was very short term, very short term indeed. But it goes to show you that even during a downtrend, there will be bullish opportunities. Obviously, this was not the low for Bitcoin Cash by a long shot. But the thing is that there will be a time when we find like some major support level for like Bitcoin Cash. And at the time, you don't know whether it is a short-term low, medium, or long-term, but eventually it will be a long-term low. But it's very difficult while it is happening to know whether that rally is, the low or just temporary. But whether it's the low or a short-term low, a bullish move is a bullish move. And yeah, okay, so let's go here to the next one, and that is Band Protocol. I have shortened the list here on these alternative cryptocurrencies. That is because I do think that they essentially pose a threat to the major cryptos. Yeah, because they are a major distraction, and we are seriously running out of time when it comes to the entire cryptocurrency market. The window of opportunity is closing very, very fast. And almost no one in the crypto community accepts how dire the situation is. So yeah, we are seriously running out of time. The crypto dollars, crypto euro are right around the corner, and they will come down. I mean, yeah, it will be a legal and tax pandemonium for the crypto market when the crypto fiat money goes live. Yeah, Band Protocol. So the 3rd of April, so way back here. So bulls are goading bears. So we have overbought RSI and PPO on the daily data points, 4 bears on technicals, 2 bulls on seasonality, and 3 bears on relative performance. So let's find the 3rd of April. So here is the following week, and we go down big. So let's go here to the daily data points. Let's find the 3rd of April. So here's the first, 2nd, 3rd. So here is the 3rd of April. From that high to this low, minus 70, almost, yeah, minus 76-ish%. Oh my, that's so brutal. I mean, that's savage. So I was bearish in that video. Did the bearish thesis play itself out? Yes, and I literally nailed the high. Like, that was pretty good. Very, very good indeed. So yeah, the method, it certainly seems to work. It doesn't work all the time, but the reason why I publish all of these trade ideas and I make these kinds of videos is because I want to master the financial markets. That's why I make videos about also commodities and stuff, because I can clearly see what kind of videos that are most popular on YouTube and BitChute and all of that. And I'm also on Rumble and Facebook and Odyssey. But yeah, that is sort of like the point. It's not. My plan is definitively not to be like a YouTuber. Long term, I do have major plans about starting a hedge fund. But in order to do that, I need to fully understand the markets. And it really helps when you make videos publicly where you are either right or wrong. Because that forces you to really think, because people, of course, will have a lot of fun if you are wrong. And that's something I see, like the videos where I am right, I almost get no comments. While the videos where the thesis didn't play out, then all of a sudden I get some geniuses in the comments who know exactly why it went down. Well, or it went against the thesis. So yeah, here we are in the sectors. Yeah, nothing yet. Now this is May, this is June. June still. So we want to find, okay, April. So here it is, Global Clean Energy ETF. So let's go to the laboratory, the 3rd of April. So where it, yeah, here it is, 200 daily moving average resistance, but we do have a 1.3 in favor of the bulls on average. So the technicals were bearish, bullish seasonality, bullish fundamentals, and the bullish relative performance. So let's find here the 3rd of April. So where is the 3rd? Here is the 4th. So here is the following week, like that, okay. Let's go here to the daily data points, and then we do some measurements. The 3rd of April it is, so okay, so here is the 1st of April, here is the 4th, so this is the following day. So the bulls, they try and go all actually 5%, 5% rally, 5% followed by a massive minus 24.5% pullback. So it's pretty clear what the bulls tried. So let me draw in. So the bears, they have a pretty good thing here with that 200-day moving average in red. Back here as well. But you do see that the bulls, they understood that, they are not dumb either. So they fully realized that they absolutely must get above it. But this was a completely failed breakout. I mean, this candlestick right here, this red candlestick, this is the ultimate tell that there simply isn't a bunch of bulls waiting to buy above the 200-day moving average. So all of those who bought, almost everyone who bought this candlestick, they were caught, yeah. It did not work out for them. So this one is a bit messy because I do have a 1.3 score here. The scores I give here, that is based on data, so it's based on data on, in this case, the seasonality, the fundamentals, and relative performance. So it was a fact that the seasonality was actually good for the ICLN ETF. But the line in the sand, the key event that I found was 200 daily moving average resistance. That definitively played itself out. So the thing is that the most important part of these theses, the line in the sand, the entry level, the stop loss level, this was bearish in this case. So, I mean, you be the judge. Was this thesis a winner or a loser? Okay, next on the list here is Global Infrastructure ETF on the 17th of April. 17th of April. So it is here. So a -2 in favor of the bears, overbought RSI and PPO. 6 bears on the technicals, 3 bulls on seasonality, 2 bears on both, well, 2 bears here on the fundamentals, and 3 bears here on relative performance, and the time cycles were bearish. So let's find the 17th of April. So here is, so this is the following week, starting on the 18th. So let's go to the daily data points and get an accurate measurement. So like this and like this. So let's find, so here is, so here's the 18th. So this was the last trading day, before I published the video. Initially we go down, then we go up a maximum 1.10%, but then we do see a very substantial pullback, -8.42. Then a bit of a rally, well, substantial rally, but then a maximum loss here of -13%. So the thesis here was bearish, overbought RSI and PPO, and it definitively played itself out in a bearish manner. So I will call this one a winner, like that. Next on the list, 7th of May, that is simply too recent. So those were all the items under sectors. Next on the list here is the thematic. So the first one on the list here is Matterport. This was on the 3rd of April. Let's go here to the laboratory. Matterport. 3.3 in favor of the bulls average, that is good. 50 daily moving average support, 5 bulls on the technicals, 1 bull on seasonality, 4 bulls on fundamentals, and 3 bulls on relative performance. And we did have a rounding bottom on the daily data points. This was on the 3rd of April, so let's find, so it is, where is, yeah, this is the following week. Certainly seems like the bears got back with a vengeance. So let's do a bit of an accurate measurement here. So where is the 3rd of April? So it is the first, second, okay, so yeah, so the first trading day after publication was, yeah, so from here to here, 4-ish% gain, but then it is all given back and then some. So did the rounding bottom work? No, it definitely did not work out, because as we can see, the 50 daily moving average, it was lost in a very substantial way. Here it becomes resistance. I mean, we haven't even tested the 50 daily moving average. So did this one work out? No, the bears came back with a vengeance. When you have support, a support level, whether it is horizontal, moving average, any indicator you can think of, we need backup. And in this case, not enough buyers. And Matterport, and along with many other stocks, they have been just ravaged. So I am very much in favor of using stop levels, of course, because you don't want to average down into something like Matterport when it goes down this big. The thing is that there will be other opportunities to get into Matterport. And if that is at much lower levels, then the potential upside will be substantial. But we just don't want to average down. So always use stop levels. So next on the list here is Immersion Corporation on the 9th of April. So let's find it here, 9th of April. Immersion Corporation, 3.8 in favor of the bulls, horizontal support. 2 bulls on the technicals, 3 bulls on seasonality, 5 bulls on both relative performance and fundamentals. Time cycles were bullish. So this was published on the 9th of April. So here's the following week, and we do go down. So let's go here to the daily data points. Now let's make all the moving averages visible. Then we find the 9th of April. So here it, so where is it? So here's the 5th, here's the 6th. So here's the 8th. Okay, so the last trading day was the 8th. Then we do rally a bit. So the thing is that after publication, you can see that, so here's the 11th of April, the 12th and the 13th and the 14th. And something you can see here, though, is that all of those trading days, they were very sideways. And even though, you know, when people trade in the market, it's not like I can click on these candlesticks and get like massive notes from, you know, the big traders about why they did what they did. But I think that we could reason that the reason why we had multiple days where the stock tried to sort of go sideways is because the horizontal support level was traded by many other people. The problem is we had multiple days of trying to form support without going higher. If you look at these candlesticks, 1, 2, and 3, you see that they start to go down. And the 14th of April here, that is just a bit of a nasty candlestick because we close also below the wicks of the previous candlesticks. But yeah, it did go substantially lower. So here, let's measure. So from the 8th here all the way down to this, that's the 13%. That is, so using it like a 13% stop level is way too wide. The trade that worked out occurred later, so let me just draw that in a bit accurately, I think, yeah, like this. So here we did get a major double bottom. So the double bottom is the trade that became like the bullish trade that worked out, but that didn't occur until early May. And when I published the video, back here, the double bottom wasn't in play, it was the horizontal support level. So did this one work out or not? No, it didn't work out in a bullish direction. Thankfully, there were multiple days where the bulls sort of tried to get something going. So it's pretty obvious that going forward, trading horizontal supports on immersion, it makes sense. Other people are also doing it. Another thing we learned here about immersion, that is what happened much later in May, where we did get that major double bottom. If I had made the video then, I obviously would have talked about the double bottom, but that is a separate trade altogether. And it's much better to use the horizontal support trade and the double bottom trade as two completely separate trades instead of like averaging down or something like that. Because there are some times where a bullish trade does not work and you get the better bullish trade later on, but there's also times where you will like go down like 70% and stuff like that. So there's no alternative really out there to using stops. And that is what all the market wizards do as well. Stops, stops, stops. Okay, so next on the list is Hudson Technologies. Okay, so this was on the 17th of April, 2022. So let's find it here. So overbought RSI and PPO, 5 bears here on the technicals, 2 bears on seasonality, 1 bear on the fundamentals, and 2 bears on relative performance, and the time cycles were bearish. And the average score was minus 2.5 in favor of the bears. So let's here find the 17th of April. So this is where I published the video. This is the following week. But then it roared higher. So let's do a bit more in-depth research on Hudson. So let's find here the 17th of April. So here's the 14th, here's the 18th. So the 18th is the following day. Then we go up 3.37%, maximum 7.67%. Then we pull back a maximum 10.10%. But then we do see that it roared higher, only to give it back as well. So, and we can see here that Hudson Technologies, it has now formed like a massive rounding top pattern. So did we see a pullback in Hudson Technologies? We did see a pullback, a 10.10% pullback. That is a sizable pullback. So the bearish points, they did play themselves out. We did, however, see later on that Hudson Technologies roared higher, only to form a major rounding top pattern. So it goes to show you how you can get all kinds of very big moves in the market. You can get a big bearish move, later on you get a big bullish move, then you get a big bearish move. So it's a very tradable stock for sure. But I will call this one it's a winner in a sense, but it also is a big mover though. You did see that there were some attempted rallies after the publication of the video that were a bit sizable, but they were given back. So the bears did come back to fight. But when you trade something like Hudson Technologies, you definitively want to be way more conservative on your position, because the percentage move is just very, very substantial in both directions. Okay, so let's go further down here on the list. Next is cars. This is on the 23rd of April. So it is here, cars. 3 in favor of the bulls on average, horizontal support. 2 bulls on technicals, 2 bulls on seasonality, 7 bulls on fundamentals, and 1 bull on relative performance. So let's find here the 23rd of April. So this is the 18th, here is the following week, and we go down. Okay, so let's measure on the daily data points. 23rd of April, where are you? So here's the 22nd, here's the 25th. So this is when I published, this is the last data point when I published the video. The following day we go up 2.6-ish%. But then it is all given back. And maximum sell-off here is like minus 26%. So did horizontal support play itself out? Where maybe for one day, one day afterwards, yeah, there were other people who thought that maybe horizontal support would hold, but obviously this one has gone down a lot. So this one is a loser. It's just this horizontal support definitively failed. Only like one day where we did see that the bulls really just tried to make support work, but there were a few buyers, but not enough. So no, it did frankly go down. And that is the thing about many of these higher beta stocks is that we have seen something similar. Many of them formed horizontal support or other kind of support levels, but they went down even more. But eventually, there will be major lows in some of these stocks, and that is when the upside will be very spectacular. But that would be a separate trade altogether. It's very important to treat every investing thesis as separate trades. When you start to think like that you can like build a position by averaging down or stuff like that, that is a very dangerous road to go down, because you can end up with like extreme losers. I mean, I saw like financial education, Jeremy, he made like a video about his Voyager digital trade, and he was like down minus 97% or something like that. It was ridiculous. So I mean, that minus 97%, let me just do some quick calculation here. Minus net. So if you lose 97% on a trade, you need 3,233% gain from those lows just to break even. Think about all the harebrained, lunatic trades that loss could have financed. I mean, you could. There's no point in having. I mean, not using stops is just, it goes completely against what the market wizards teach, and also people like Warren Buffett. People think that Warren Buffett is just a guy that buys and buys, but he has been very clear that the number one rule is to not lose money, and the rule number two is to not forget rule number one. So that means that he definitively is a major advocate of using stops. The benefit that the Warren Buffett has is that his trading account is so monstrous that he can actually form lows in securities. So if he has decided that the low in a stock is $9, then he can have these monster buy orders at that price, and then it is simply impossible for it to go below it. And that is how some super major lows can form in securities. And billionaires like him, make huge money, literally getting in at the best level. But most people cannot fight the market simply because their accounts is not big enough to fight all the bears out there, if we are talking about a bearish trade that some monster bull wants to just ravage. Okay. Next on the list is Gaia on the 30th of April, multi-decade horizontal support level. That sounds pretty good. But were there enough bulls? So here is Gaia, horizontal support exclamation mark. We also had a rounding bottom. So 7 bulls here on the technicals, 4 bears on seasonality, 6 bulls are back on the fundamentals, but 2 bears on relative performance. Here is Gaia. Let's find the 30th of April. So it is. So here's the 25th of April. Here's the following week. Yeah, so let's actually measure this one in more detail, because something very interesting happened here. So let's find when I published the video. Yeah, so here's the 29th, the last trading day. Then we did have a 14% rally. We give some back. Then we close here, 9-ish%. But then we do lose it. So the key event here, let me just draw it in. That is definitively this green 50-day moving average. The problem for the bulls is that it was a pretty solid resistance level. And while the bulls did have some attempts at getting above it, they were not able to sustain the adventures above the 50-day moving average. If we go back here to the weekly data points, so here is where I published the video. So 1, 2, 3, 4, 5, 6, 7 weeks after I published, you do see that there is this consolidation pattern. So there were many people out there who thought that the horizontal low was forming. So I will call this a short-term winner, but obviously the bears have been able to smash through that horizontal support level, but many people tried to form support here. The bad news is that a multi-decade horizontal support level was damaged. But short-term, the trade idea did play itself out. Let's go further down. So this is May. So I think that we have gone through all the ones here for April. But now we have to go to the other themes. So the first item on the list is Sleep Number Corporation. This was on the 3rd of April. So let's find it here. So 4.3 in favor of the bulls, oversold RSI and PPO. 2 bulls on the technicals, 5 bulls on seasonality, 6 bulls on fundamentals, and 4 bulls on relative performance. So where is the 3rd of April? So this is the following week. So let's go here to the daily data points and the measure. So the 3rd of April, so let's go a bit back here. Here it is. So I think we should zoom in a bit, like that. 3rd of April. So the last trading day was the 1st of April. We go up 4%. That is continued the following day as well. And then we have what is it? A 4-ish%. Well, let's measure. It's a bit difficult to measure. If we can measure it like this. So it was a 4-ish% pullback. Then the bulls are back, 6% gain, given back, 3.33% gain. The key level here is definitively this purple 20-day moving average. Bears, bears, bears. Bulls try a bit, but the bears are back at it, as you can see. But it also is an important level here for the bulls. They do use it as a support level. But yeah, the 20-day moving average has been a pretty big deal here for Sleep Number. The thing is that we did get a bounce here for Sleep Number, but it was very far from a rude awakening coming to the bears. So it was a very short-term winner. But at least it wasn't a loser, but it was a clear case of why even if you have a gain, you need to just tighten your stops along with the gain, because it's very difficult to predict far into the future, and further into the future here, the bears definitively came back with a vengeance. The bulls failing at these resistance levels definitively emboldened the bears substantially. So let's go down the list. And then we have JP Morgan. And this is under the too big to fail banks theme. So when we go here to the laboratory, here is JP Morgan Chase. So 2.8 to the bulls, 200 weekly moving average support, 4 bulls here on the technicals, 3 bulls on seasonality, 6 bulls on fundamentals, but 2 bears on relative performance. Here is a JP Morgan Chase. So let's find the 17th of April. So here is the following week. You can see here that 200 week moving average support here. It is still support-ish, but there's a big but. It then became resistance, which is not good. So support failed. Let's find here the 17th on the daily here. So it is 14th, 18th. So the trading day, the last trading day, the data point I had when I published the video was on the 14th. From then you did get a 5.7-ish% rally, but it was all given back. So there was a rally. This rally was in all likelihood related to 200 weekly moving average in red, potentially offering support. Did the 200 weekly moving average succeed in forming a low for JP Morgan? No, but we did get a rally. So I will call this one a winner, but here again, this was a short-term winner. It was another lesson in why it is very important, if you do get a gain, to tighten your stops. Because even if you get like a 5% gain, if you get 5% gain like 3 times in a row, and then the compounding starts, to work pretty well. But obviously the ideal in the market is to find long-term lows. But when you find a low, you don't know whether it's going to be short, medium, or long-term. You only know that after the fact. And that is just one of the frustrating, but potentially also rewarding parts of being a participant in the market. But, I mean, it's just the way it is. So next on the list is Madsen on the 23rd of April. So here's the 23rd, Madsen, 200 DMA support, 0.8 in favor of the bulls. 2 bulls on technicals, 1 bulls on seasonality, 1 bull on fundamentals, -1. So you got a 1 bear here on relative performance. So here is Madsen. Where is the 23rd of April? So here is the following week. So you can see here that this green 50-week moving average, it is forming a low. So let's find here on the daily data points. I like that. Zoom out a bit. So let's find here the where is the first trading day? The 22nd. So the 23rd here of April. So the 22nd. Yeah, so you see here that the following week, the 200 daily moving average was lost. Then we do get above it, we lose it. So you see here that the 200 daily moving average has now been more profitable for the bears than the bulls. So let's just quickly do a bit of a math. So 1, 2, 3, 4, 5, 6, 7, 8. Yeah, count that as a 9. And if we say 1, 2, 3 if we are generous, 4, 5. So you can see here that the 200 daily moving average is now in the ownership of the bears. And you see that this candlestick here on the 8th of June, it was really ugly. You see that it engulfs so much. It just swallows up. Let me just draw it in. Just look at how viciously it just devours so much price action. So just terrifying for the bulls. Yeah, so 200 daily moving average, it did not work out. Just did not. So this definitively was a win for the bears. Next on the list here is... What is next on the list? No, this is May. I think those were all the items. Yes. So I think that a lot of the theses, they did play themselves out pretty well. So I do think that the method is still pretty well functioning. I will, of course, continue to develop the method. The long-term plan, of course, is to make a hedge fund, also thinking about making ETFs in the future. But before that, I simply have to master the markets. And I think that's the way I do it now, by publishing videos about investing theses and also reviewing them 2 months later. It is the best way for me, and also for you, to learn about the markets. And the people that I will recruit in the future, to work, for the hedge fund and stuff like that, that will be people who are, subscribers and who understand the method. But yeah, definitively very interesting things here in the market. The biggest losers were definitively in, the places where the investing theses were severely falsified. Were in the stocks, the megatrends, stuff like that, where we did see numerous like very short-term beneficial moves, but that were just vanquished by the bears. But yeah, interesting stuff, and stay tuned for more.